So today I'm going to be doing a second investor video on Horizonte Minerals, a company that I'm invested in, and I covered this last year in a video that's on my channel back before they completed the feasibility study on the flagship Araguaia nickel project. Horizonte are the leading nickel development company on AIM at the moment, and their market cap's around about 30 million. The market cap has fallen back a reasonable amount since I did my last video, and I think I blame this as along with other junior resource stocks that have suffered significantly over the last perhaps 4 or 5 months due to the sort of macro conditions and things like trade wars and the drop in commodity prices. So I think personally I see an even larger opportunity on offer here now with Horizonte from an investor's perspective, given the sequence of events. So the company itself is led by CEO Jeremy Martin, and there's a very strong board on the company with a lot of experience in the mining sector, and the company has been working very closely with the regulators of the government in Brazil to secure permitting, and been working on a community level to get this project through to the current stage where it's at, where it's basically now fully permitted, and they've delivered the feasibility study. Now, they have 2 tier 1 projects, which is the Araguaia project, which I've just mentioned, and then the Vermelho project, which they purchased from Vale last year, which was basically a large nickel cobalt project. And interestingly, what this does is it gives the company the prospect for growth and to become a major producer of nickel going forwards. Now, the nickel market itself, well, it offers a compelling investment for investors, I think, because nickel is coming off lows. It's been bobbing around this sort of the 12,000 tonne per level for a while. Now, it peaked in 2018 to about 16,500 tonnes, but the long-term nickel forecast price is 22,000 tonnes, $22,000 a tonne, and the mid-term consensus is $16.8 thousand per tonne. And a lot of these prices have been factored into the feasibility study and feasibility study scenarios in terms of what sort of economics we can expect the Horizonte projects to produce. But I think it's worth noting that nickel has a very strong and robust future from at least my perspective, from what I've looked at, in terms of there's going to be strong demand from the EV sector, and the stainless steel market is expected to keep growing as it has been. So when you look at where nickel is now compared to where it has been, you could argue that with those 2 elements that the nickel price should be on its way back up, and we've obviously witnessed already the LME stocks continue to fall month on month. So it's an interesting market to be looking at, as is other markets such as copper, and other commodities where the prices are expected to increase given the lack of investment over the last 10 years in exploration projects. Companies like Horizonte have basically picked up these projects at the bottom of the market and have chosen to take them through the de-risking phase. With that has come some form of dilution to shareholders, but those gains, that investment should start producing a return now as we go into a more of a bullish cycle for commodities. Now, in terms of the projects, well, they've got these 2 tier 1 nickel and cobalt projects, Araguaia and Vermelho, which are very close together actually, and this is significant for the future prospects of both those projects because there can be synergies in terms of logistics, permitting, all of that, all of these things to consider, which could put Horizonte as a major developer and miner and producer of nickel. So the Araguaia nickel project, the feasibility study has been delivered, and it was delivered at the back end of last year. and it shows robust economics for the project over its 28-year life of mine, which is actually the standard metric that would be used in a feasibility study. The likelihood is that that mine life would be extended significantly, perhaps up to 40 years. But the interesting thing about the feasibility study is, and this is what the company did, and I believe that they've done that to show the overall scope and size of the operation that would attract a big partner or perhaps even a suitor to the project. It's got a stage 1 processing of 14,500 tonnes per annum, moving up to a stage 2 of 29,000 tonnes per annum. But the interesting here is that the capex cost is fixed at 401 million. Now, some people think that's quite a high number, 401 million. Well, it is a big number. However, when you look at the free cash flow returned over the life of the mine, which we'll show you on the next slide, it's actually a very small amount in terms to the overall returns that the projects would produce. Bear in mind that 401 million includes a 20% contingency as well. So the plan they would have is to produce the 14,500 tonnes per annum after construction is completed, and within about 3 or 4 years, reinvestment of the free cash flow would allow them to do the expansion with no more upfront cost. So the upfront cost stays the same, and that would move them to the 29,000 tonnes per annum operation, which would add significant value to free cash flow. And ultimately, as they continue to produce and bring in money, they can then start looking at developing the Vermelho project. And the Vermelho project itself would, in conjunction with the other projects, would allow you to move towards around about 50,000 tonnes of nickel per annum operation, which is simply a very large operation and something that we would see majors doing. So the Araguaia project itself, it's fully permitted now. They've got the construction license for that, just received that, and now that means the project is now fully de-risked in terms of permitting, and the feasibility study, as delivered, now de-risks the economics, as they're pretty much set in stone there and for all to see. And then the Vermelho project itself, this is obviously further behind the curve. It's acquired from Vale, again at the bottom of the market, so to speak. And there's a PEA scoping study coming on that, which will reflect, I should imagine, the synergies with Araguaia. And it's worth noting that this project would be a different type of project, probably more of a lower amount per annum, higher grade project than perhaps a lower grade, higher scale project that Vale would have been intending. Hence why the PEA is being done on Vermelho. So if we just flip back to Araguaia, given that's the main de-risk project at this point in time, you can see on the slide here that there are a number of different scenarios, and I've taken the stage 2 scenario. So this is when they're producing 29,000 tonnes per annum, which would be around about, I should imagine, their first production on stage 1 would be around about 2021. And they would be able to move to the stage 2 operation probably by around about 2025. And you can see there the different economics, and I think it's worth highlighting that at the 2018 high of $16,500 a tonne nickel, the project would return 3.9 billion in free cash flow. If you then actually took a slightly more longer term view, so say around 18,000, the free cash flow moves up to 4.67 billion. Now, interestingly, if you look over the last 10 years and you look at the nickel price in 2007, it peaked up to $50,000 a tonne. Well, if we just look at half of that price, which is $25,000 a tonne, the free cash flow figure moves up to 8.37 billion, and the project has a NPV of nearly 3 billion. This is significant, bearing in mind that you've actually only spent 400 million capex, and you've been able to, turn the project into the stage 2 operation from free cash flow. So it is pretty much a phenomenal opportunity. And if investors can have a longer term view here, then personally I would think that the company can take these projects into production. Or would it just be that a major comes along and takes a big project stake along with Horizonte, or potentially buys the projects out? It's the figures are there to see, and I think they're quite compelling, especially for a company that's currently sitting at a 30 million market cap today. So what's the roadmap for the company then, where we are from at the moment? Well, okay, we're in 2019 now, so what do we think that would be happening over the course of this year and then getting towards becoming a producer? Well, Araguaia, the financing. So this is going to be something that the company are looking at now. They've already said that they're talking to potential offtake debt and equity partners. The discussions on that don't need to happen too fast, because the company want to be in the right environment. I mean by that, I mean the nickel environment. So don't do a deal at the bottom of the market. If you think the price is going to move up, wait a bit longer and strike a better deal, which is what shareholders would be wanting. Then we would be moving on to construction, so literally getting the project up and running. It's all fully permitted, and moving towards a producing company. And alongside that, while those discussions and planning's ongoing, you've got the Vermelho project, which the company are very active on. They're looking at battery metals testing at the moment, and what they're trying to do there is to see if they can turn the mixed hydroxide product into the product suitable for going into batteries. If the result of that is positive, that's a massive win for the company, because it puts them into potential battery metals product space, which is going to be, I think, a hot potato for the coming years. And alongside that, as I mentioned earlier, they're going to be doing a new PEA scoping study for a lower tonnage, higher grade operation for Vermelho, which can benefit from the synergies of Araguaia, and the locality to Araguaia. So, there's plenty coming from the company this year, and let's not, ignore the possibility that now the project has been significantly de-risked through feasibility study delivery and through permitting being fully completed, that a potential suitor wouldn't come along and just buy the project or company. And we've seen evidence of that in the past, given that Caneco's Oncopuna mine was pretty much identical to Araguaia and was sold for $850 million in 2005. And what's interesting about that is that when nickel peaked in 2007 at $50,000 a ton, you can see that the acquisition at that time was moving in a higher nickel price environment and towards a higher nickel price. Well, we're actually in a similar situation today, where nickel's coming off lows and moving into a high nickel price environment. So if you're taking a longer term view, are we going to see M&A activity like we did then? And if so, and Araguaia is in the same sort of league as the Oncopuna mine, are we going to potentially see something come in terms of an offer there, or at least a JV struck at interesting levels? Probably worth just noting that the company are fully funded through 2019 as well, so they have a decent amount of cash, probably I would suggest about £6 to £7 million of cash. They don't need to rush, they don't need to fundraise, they don't need to dilute anymore. They are now in a good position. So I think what we need to do now is just quickly wrap up by talking about what the investment case is. This hasn't really changed from my last video. I mean, as far as I'm concerned, I like the fact the company are fully funded. and they've got a large institutional backing. Glencore actually recently increased because they took equity as part of their settlement for a deferred payment on Araguaia. They've got 2 tier 1 nickel cobalt assets. You know, they're in the right space at the right time. There's a lot of bullishness on nickel over the next few years. These assets were acquired at the bottom of the market, and Araguaia now is fully de-risked. You know, the Araguaia ferronickel project, as I said before, is similar scale and size to the Oncopuma project. So, you know, you need to bear that in mind in terms of would it be a conceivable target for bigger players. The Vermelho project itself is very interesting as well. And what's more interesting about it is that since it was acquired from Vale, Horizonte managed a 117% increase in resource. And they've got something like 90,000 tonnes of cobalt there now. And I think the joint mining operations between Araguaia and Vermelho would result in around about 3.1 million tonnes of contained nickel. So, you know, you're talking about a very large amount of metal in the ground, upwards of $50 billion. And, you know, you've got a leveraged exposure to nickel here. So it's because of the way the economics work and the way the economics move upwards as the nickel price move up, they move up significantly. So if you are a bull on nickel, at least even from this level now, you know, the company's got you know, market leading C1 costs, and will be producing high grade you know, product in the first 10 years of the mine life at Araguaia. So it's going to be attractive, and you've got a management team that have and continue to deliver. So from my perspective, I'm looking at the current valuation of the company. I'm seeing that it's dropped recently. I'm looking at what they've delivered. They have delivered. They've done what they've said they've done, going to do. And for me, it's a compelling investment. So I hope you like the update on Horizonte. The company's come forward a long way, and I think this is where things will start get interesting for investors or potential investors. Thank you.